What if I told you silver might be setting up for one of the most misunderstood moves of 2026, and almost nobody is paying attention? Not retail investors, not mainstream media, not even most silver bulls, because right now, silver looks boring, flat, slow, quiet, but markets don't explode when everyone is watching. They move when attention disappears, and that's exactly what's happening. Welcome back. If you're new here, this channel isn't about hype. It's about identifying structural shifts before they become headlines. And today we're going to talk about something different. Not a crash warning, not a default alert, not another emergency headline. We're going to talk about a setup, a quiet setup, forming beneath the surface of the silver market. And if you understand this setup, you'll understand why 2026 might surprise a lot of people. Every major move in financial history shares one thing in common: silence before expansion. In 2009, nobody wanted stocks. In 2019, nobody believed gold would break out. In 2020, few believed silver would double in months. Markets move from disbelief gives acceptance, gives euphoria. Right now, silver is in disbelief, and disbelief is fertile ground. Let's address the obvious. Silver hasn't exploded. It hasn't collapsed. It's moving in a frustrating range. And this is exactly what shakes out weak hands. Sideways markets create boredom. Boredom creates exits. Exits reduce positioning. But when positioning reduces, the next move becomes more explosive, because fewer people are ready. Now zoom out. Global debt levels at record highs. Interest rate cycles shifting. Geopolitical tension. Persistent industrial demand. Rising especially in solar and electronics. Silver isn't just a precious metal. It's a monetary metal and an industrial metal. That dual role matters because it means silver reacts to fear, inflation, industrial growth, currency weakness. Very few assets have that combination. Silver's biggest short-term enemy, a strong dollar. But here's the interesting part. The dollar's strength isn't structural, it's cyclical. When rate cycles pivot, the dollar weakens, metals strengthen. If we enter even a mild policy shift cycle in 2026, silver benefits, and markets price in expectations before headlines. Now let's talk supply calmly, not dramatically. Mine production growth is slow. Exploration budgets are constrained. High-grade discoveries are rare. At the same time, industrial consumption continues to expand, not exponentially, but steadily. Markets don't need collapse, they need imbalance. Small imbalances create large price responses over time. One of the most overlooked indicators, sentiment. When silver trends on social media, it's usually late in the move. Right now, engagement is lower, excitement is lower, speculation is lower. That's not bearish, that's reset behavior. Markets need emotional resets before expansion. 3 potential catalysts. Monetary policy pivots sudden industrial demand. Spike dollar weakness. It doesn't require apocalypse. It requires alignment. And alignment can happen quietly. Let's stay balanced. Could silver stay sideways longer? Yes. Could macro conditions delay movement? Yes. This is not a guaranteed breakout video. This is a probability discussion. And probabilities shift when fundamentals align with sentiment. If you're a long-term investor, sideways markets are accumulation environments. If you're a trader, volatility compression usually precedes volatility expansion. Either way, quiet phases deserve attention. Market cycles don't move on calendar years, but structural shifts tend to cluster. Debt levels, rate adjustments, industrial transitions. We are entering a period of structural adjustment globally. Silver historically performs well during monetary transitions, and 2026 sits inside that transition window. Silver doesn't need drama, it needs imbalance. Right now, we are watching a quiet market, low excitement, steady structural demand, macro uncertainty. That combination doesn't scream, it builds, and when markets build quietly, the move usually surprises. Not because it was unpredictable, but because most people stopped watching. If you want calm, structured silver analysis without panic headlines, subscribe. Because here, we're not chasing drama. We're tracking structure. We're not reacting to noise. We're studying positioning cycles, sentiment, and the quiet shifts that most people overlook. Anyone can shout collapse or moonshot. Very few take the time to break down what's actually building underneath the surface. And that's where the real edge is. The biggest moves in markets rarely come with a countdown timer. They don't send invitations. They don't trend on social media before they happen. They build quietly. They compress. They mature. And then suddenly, everyone calls them unexpected. If you want to be early instead of surprised, if you want analysis over emotion, if you want preparation instead of reaction, then stay here. Because the next phase in silver won't announce itself loudly. It rarely does. And when it finally becomes obvious, the opportunity usually looks very different than it did during the quiet phase. Stay patient, stay informed, and I'll see you in the next one.